Hi everyone, let's look at my two micro scenarios including potential trading setup, starting with this first scenario where we're looking for an ABC, which is a 3-3 and then a 5-wave move to the upside, where this wave B bounced perfectly in the most common target area for an expanding flat wave B, which is between the 1.236 and the 1.38, where we also had this daily naked point of control at 27k. This first potential trading scenario was a reactive scenario, basically meaning that first you want to see some sign of support of a reaction before then potentially entering. And if I go to the 5-minute, you can see we wicked into the area as well as the daily naked point of control, closed above the 105 fib, which then was the potential entry for then a move to the upside. If we then talk about a wave C, usually wave C and then an ABC is quite a quick 5-wave move, like a 1, 2, 3, 4, 5, relatively quick compared to wave B as well as wave A. But at the moment, as it stands now, we have been ranging for quite a while, and you definitely want to see follow through if this still wants to be a wave C, where the most common target area for a wave C is the white area over here, basically between 28k and about 28.3k, where we also have the daily naked point of control at 28.1k. So that is quite interesting, going from the daily naked point of control to the at the lows to the daily naked point of control at the highs. That would be pretty sick as well. Now the potential trading setup, as shown in my previous video, the one that we had over here, was basically where in the morning update I said, hey, if price moves to the downside and creates bullish divergences between the low over here and the new low, that could be a potential entry. Now that is also what we got. We got eventually this move to the downside, where if I go to the 15-minute on the CVD chart, you can see we have a low, we made a higher low, but on the CVD, the yellow line, we made lower lows. Also with the second drop that we got over here, again, lower lows compared to this low that we made earlier, this one over here, compared to these two. So the potential trading setup was having a long entered somewhere around this area. Stop loss, the invalidation of this trade is taking the low. This is the invalidation for a CVD type of trade, okay? So that is then the stop loss. However, once price starts to move to the upside, the stop loss can move maybe below this target box over here, or maybe below this low. In both of the cases, you wouldn't have been stopped out. If you would have put the stop loss break even, as I've also commented in my previous video, that hey, break even is an option because we had some volume to the upside, you would have likely been stopped out. But I kept my Discord group up to date with, hey, you want to see some sort of a reaction because we did move to the downside on, again, a little bit of increased volume. So you want to see some sort of a reaction, some sort of support before then re-entering with then the stop loss again somewhere below the target box, below the wick, or maybe below this wick. So yeah, eventually we got some reaction, we got some support and moved to the upside, where then again this trading setup has quite a similar target in this particular scenario, where the daily naked point of control is just such an important level that I'm looking for at the moment, where if we go to the 1-minute, and I've actually posted a screenshot about this in the group as well, from the reaction that we got, we eventually could say we had a 5-wave move on the 1-minute to the upside. Now, I rarely go to the 1-minute. By the way, this is John's. He's in the group time frame. But you could count a 5-wave structure over here for then maybe a corrective, or this is already the correction, but maybe a corrective structure for wave 2, and then eventually a wave 3 to the upside. But that is, of course, yet to be seen, as we are currently, as it stands, still ranging and price has not yet broken out. Now, you do read, I have Confluences Map over here, and that is actually important. So if I close this scenario for a second and I open my Confluences Map, I've prepared something for this videos, especially for you, where you most often see me use my Elliott Wave knowledge in the videos compared with together with other confluences like horizontal time frames or time frame horizontals like dailies, weeklies and whatnot, or volume levels like the daily naked point of controls. However, I do have other tools and stuff in my arsenal, and I do like to show you this one, which I thought was quite interesting. So I pulled a speed fan from the high, and if I actually put the low time frame count on the chart, you can see 1, 2, 1, 2, then we have 3, 4, 5. And what I did is from the high of this yellow 2 to the low of 3, I pulled a speed fan, which is this one over here, right? The fib speed resistance fan. And what this does, or what this shows, is a couple of lines on the chart which can act as resistance, but it's also taken into account time, which I like. So what you're seeing right now is you see the 0.5 line, the 0.5 fib, one can say. And we first had a reaction when we hit it for the first time, moved to the downside, went up, hit it again, moved down once more, and then for the third time we actually started to range right on top of the 0.5. Then we went above, kind of backtested it, you could say, and now we basically went past the 0.5 fib. And when that happens, the probability for price to move onto the next target in the fib speed fan, which is then the golden pocket, is of a higher probability, right? The probability increases once the 0.5 is passed that we move on to the golden pocket area. Now, if we look at these speed fans, the 0.66 and the 0.618, in combination with the ABC flat over here, you can see that the white box that I have on my chart, the two white boxes actually now, which include the daily naked point of control, are around this area. And I think it would be quite nice if price would move in that scenario, right? Where this is then an A, B, C to the upside, where the most common target area of C is here with the daily naked point of control. If that would coincide with the golden pocket fib speed fan right around this area, where I did put some vertical lines to show you the time that I would prefer price to move to the upside. So I would prefer price to hit this target area somewhere between Tuesday the 25th at 10 p.m., which is Central East European time, that's my time zone, or the maximum target over here being about the 26th at 7 p.m. So basically between tonight, Central East European time, and tomorrow night, Central East European time. So if we do see a move, I would prefer to hit this target box somewhere in between these vertical lines, which has confluence then with the golden pocket of the speed fan, as well as all the other confluences. Like we have a little high, we have the daily naked point of control, and of course we have the target area for the flat all around this area. So that is quite an interesting area indeed for if price is going to move to the upside. Quite a stretch still from where we are at the moment. With the bullish divergences that we have, by the way, the main target is taking this high. So the high currently at about 27.6k, that is the target for the bullish divergences. The moment we take this high, the bullish divergences have played out. If price continues to the downside, then of course eventually once we take this low before we take this high, the bullish divergences are invalidated and the divergences were leading. That's how you call it. Like when price is following the divergences to the downside, we called it leading divergences in this scenario. So this is the more bullish scenario. If we then go to the WXY scenario, it's, I don't want to say a more bearish scenario, but it's, let's say, a different scenario. So in this scenario, what we're looking for is this to be a W. Then we have a 3-wave X, which is actually quite long. So we have a 3-wave X over here, followed then by 3 waves in Y. And in this particular scenario, I actually should change the, so in this particular scenario, it's actually correct. We can either have a wave A, B, C, or we can have a WXY. And you can see I have different pivots for the A and the W, which is on purpose. So in this particular scenario, the trading setup, by the way, that we have over here is just copied from the other scenario I've just shown, and actually it's in the middle of my chart, so I remove it. So what we're looking for here is either this to be a 5-wave structure, and then we have a corrective sideways move in a wave B, for then eventually a wave C to the upside, which then is a zigzag. So it's a 5-wave move, where a wave B can also be a triangle. Now the triangle scenario, I don't really like it if this is a wave A, because then this has to be some sort of a 3-wave move over here. But yeah, that doesn't look that great. It's not a zigzag because then it's a 5-3-5. So I might prefer the W scenario in this case, where we then have this as a 3-wave and eventually a W. Then we might have in wave X a triangle, which then is a first wave, second wave, maybe third wave, fourth wave, fifth wave. In this scenario, the moment price is taking these lows, usually the triangle scenario is invalidated, because you want to see a higher low, a higher low, a higher low before then continuation to the upside. And then this being a W, triangle in a wave X, and then eventually continuation in a wave Y, which then is another 3-wave move. In an ABC, it's a 5-wave move to the upside. So that is something to take into account. The most common target area for a blue wave Y, in that this being a WX and then the blue Y, is between the 1 and the 1.236. So this is significantly lower than the daily naked point of control, because this target area is between 27.6K and 27.8K. We do have a high over here for a little bit of confluence, and if I pull a volume profile of this range, let's have a look. The value area high is actually just below the target area. So now we're just going to play around a little bit to see what the value area. So we do have actually, if we take this section, so basically if we take a volume profile of this wave X, you can see that the untouched value area high is still, or it's still fresh. Like there's still a fresh value area high at about 27.7K. So this could be inside the target area of wave Y, could be a little bit of a resistance area at 27.7K. So that is something to take into account. Now, a rare target for a wave Y is the 1.618. It is rare, but it is possible. That's why it's rare, right? And this target is quite close to the daily naked point of control, as well as the high that we have over here for then a potential trading setup right there, as shown also with my flat scenario, right? We have the potential short scenario over here to enter at around the daily naked point of control, stop loss safely above for then a move to the downside. Now in this particular scenario, if price would go over here, it's the exact same trading setup. Or if price takes this high, which is the goal of the divergence, and then maybe this high with the value area high that we have of the range, one could have this as a potential trading setup, but that's a lot more risky. So I don't like that just yet, because that really depends on how price would potentially move to the upside, if it does, of course, in this particular scenario. Now the most bearish scenario, which is actually one I removed from my chart, but I do at least want to say it, is of course if price continues to the downside, where this is then some sort of a wave 1, 2, so a 1, 2, 1, 2, and then eventually now we're in a bigger 3 to the downside. Another possibility, which is quite extreme, is that we get some sort of a diagonal, which then is a, so we have a 3-wave move over here, looking then for a 3-wave, or this could already be the 3-wave, then another 3-wave down. It's just not likely. So yeah, a diagonal is also not very likely in my opinion. So yeah, I'm just rambling by now, wasting your time. So hey, I hope this video was helpful or valuable to you. Please check out the macro and high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.